word selfie is a relatively young concept, and yet it has become an unmistakable part of our daily routine. On the other hand, ESG as a concept is much older than selfie. It had its origins in the 1960s with socially responsible investing and became an official term in 2004 coined by the United Nations Global Compact Initiative. Just like the selfie in digital life, ESG has become much more integral and unmistakable in capital markets, now with an enlarged role in investment decisions. As we look towards another year, we expect ESG to play an even bigger role in global markets. Hence, today's event is timely, and we are fortunate to have us our esteemed speakers in environmental, social, and governance space. Our first session is with our very own Maybank ESG Head of Research and Maybank India Investment Banking Country Head, Mr. Jigar Shah, who is going to discuss about this important investment topic, that is, does a high ESG rating lead to more alpha? While our second session is with the PSE's Chief Operating Officer, Attorney Ruel Refran, who will have a conversational Q&A discussion on how the PSE can play a critical role in the overall ESG narrative. Part of the panel today will be our Maybank Philippines Head of Research, Jackie De Jesus. Without further ado, ladies and gentlemen, please welcome our first speaker, Mr. Jigar. Jigar, please go ahead.
So thank you very much, Alex. Thank you for inviting me to this ESG event hosted by the Philippine Stock Exchange and Maybank Securities. For today's session, I have a presentation for about 15 to 17 minutes. And this presentation is in three parts. In the first part, I want to talk about the various ESG trends. ESG has been in news for good reasons and bad, especially in 2022, it has received some flack. And I want to give you an idea in terms of what's happening at the fund and investing level and at performance level for the ESG, followed by the positioning of ASEAN within ESG. And last but not the least, whether ESG is generating alpha in terms of the stock market returns in ASEAN, and that we have observed over a period of 1, 3, and 5 years, and how it works. That's something which I will provide an overview. And then, of course, we will have a Q&A with Jackie, and if there are any other audience questions, that also we can take. I would request Priscilla to roll the slides for me for this presentation. So starting with the fund flow and the performance and other developments for ESG. Go ahead, next. The sustainable funds and AUM is now at about $3 trillion. We are using the Sustainalytics Morningstar and PwC for some of these slides and the data that we are discussing. You can see very clearly that in the past 10 to 11 years, there is a substantial increase, almost 5 to 6 times increase in the AUM for the sustainable funds. And also the exponential increase has been there in the principal, the PRI signatories, which is suggesting the amount of involvement of ESG compliant funds globally. So that is on the rise in a quite substantial manner. Next. If we look at the first 9 months of this calendar year, we are seeing some slowdown in the third quarter, but in the second and third quarter. In the first quarter, there was a robust fund flow. It is still positive, but it is obviously slowed down considering the conflict that was seen in Ukraine and Russia, and as a result, there was a lot of volatility and upheaval. But overall, we also see that Europe is accounting for a very large proportion of the ESG assets and also a number of funds, because Europe leads in terms of the taxonomy for the sustainable investment. In terms of sustainability regulations, the European Union is quite ahead. And for many years, they have got a very robust and explicit carbon tax, which is being collected through the compliance markets. If you are not aware, just to say that Europe has an explicit carbon tax of nearly 70 euros per ton. So that makes the European market a very robust and leading market as far as the ESG and sustainability-led investment is concerned. Followed by America. America has been lagging, but is now taking some aggressive steps with the new democratic government taking steps in terms of the proper taxonomy, as well as the recent IRA, the Inflation Reduction Act, which is going to spur a huge amount of investment into the sustainable areas. Asia, as you can see, has just 2% of the total assets and about 6% of the funds. There is also one of the factors that one needs to consider over here is that a lot of the funds which are there in Europe, they are getting repurposed or recreated based on ESG considerations, and therefore we are seeing a disproportionate amount of European dominance here. But the same thing is likely to happen in US and Asia as well, as the taxonomies become more integrated with the companies and with the investors. There is a regulation towards green labeling of the investment products as well. As the carbon tax also becomes explicit in some of these geographies, we will see a significant amount of assets under management moving on to ESG. There's also a chart showing the quarterly numbers, and you can see that pretty much the fund flow peaked in the Q4 of 2021. And thereafter, there is some amount of reduction, but it's still quite positive. In fact, ESG as a category is the fastest growing category still for the overall assets under management. And if you look at the overall growth in the assets under management globally, ESG is definitely growing much more than the general rate of growth. Next. So this is the chart showing global ESG AUM in the form of the mandates, in the form of mutual funds and private markets. And the forecast is that in each of the assumptions, whether under the low base case or best case, there is going to be a substantial increase. And ESG as a percentage of the total assets under management is likely to increase to between 17 to 29% of the total assets under management. That's the kind of growth that is expected. And if we look at the global ESG AUM by region, Asia Pacific is quite low at 1 trillion at the moment, but is likely to increase substantially. And it is going to grow faster on a low base compared to Europe and America. Next. When it comes to the fixed income market, in terms of the global sustainability and the social bonds and the green bonds, the market is $3.5 trillion and has been rising quite steadily. But again, this market is primarily in Europe and to some extent in America, and Asia contribution is still very small. Green bonds have a very large share, and sustainability bonds also have a good share. The more difficult transition bonds are still lagging, and even the social bonds issuance is still quite low on a comparative basis. One of the product sovereign green bonds or sovereign sustainability bonds are slowly becoming popular, and that issuance could probably go up in time to come. Next. As far as the returns are concerned, you can see that in 2021, there was a strong outperformance by ESG funds. And even in the previous periods, I believe the data is more available from 2017 onwards, when the Sustainalytics and the other service provider, MSCI, started giving more regular data on the ESG. We can see that there was a good outperformance by the ESG integrated funds in the past 4 or 5 years. 2022, however, has not been so good, mostly because of the substantial increase in the fossil fuel prices and also in the metals. Next. This is one example which suggests that how the boom in technology and sort of poor cycle in the fossil fuel coincided with the rise of ESG, and some of these companies became synonymous with low risk ESG, particularly companies in the technology space and other services sector space. Next. Some of the surveys which are done with institutional investors clearly suggest that the importance of ESG is increasing in terms of the practices adopted by the investment managers. So the investors want investment managers to increase the integration of ESG practices in their investment, and also the investment managers want more from the corporates in terms of the ESG disclosures. So it is quite a 360-degree thing where there is a complete feedback loop, and this kind of importance is very, very positive going forward for achieving the targets which will actually help the planet in terms of the warming, as well as the people who have to go through the effects of the externalities in the form of the natural disasters and such other issues that we are facing due to the climate change in terms of health, pollution, and others. Next. Once again, some more questions on the ESG adoption by institutional investors. And as you can see very clearly that there is a majority opinion going towards integrating more ESG practices at the fund level, as well as the belief that the integration of ESG in the fund management practices as well as at corporate level is resulting into better financials and better stock price performance. Next. This is actually a meta-analysis of the academic studies on ESG and the financial performance, and it broadly again suggests that the impact is positive at the corporate as well as at investor level, two important stakeholders for ESG, and the impact is positive in case of both. Next. There are some questions in the form of the ESG breakdown in terms of what is more important, E, S, and G. And we believe that E is clearly the most important driver of change. It is also the biggest contributor of our problems at the moment for the planet as a whole. And therefore, it is the most sought after in terms of disclosures, in terms of solutions, in terms of risk management, followed by S. But in case of S, the matrix have not fully evolved. And the quantification is somewhat difficult. G is definitely well evolved, and G is very important if both E and S have to be achieved. So G is kind of foregone conclusion that it has to be in place. But at the moment, I would say E is the most important, on which globally the fund managers, bankers, asset managers, all the people are working on that to improve that and to manage that better. Next. Some of the ESG investing challenges are that the quality of data is not that great. The quality of data could be very good in one part of the world, but not so good in other parts of the world, or completely deficient in some other parts. So that is making the comparison difficult. And generally, the comparison happens with financial data, because end of the day, the financial investors have to take a decision. They want to convert everything into the financial terms. And that becomes very difficult when you cannot have a proper standard of comparison. But one thought I have over there is that it took about 70, 80 years plus for the financial gap to become standard world over. But in case of the non-financial information, it is probably happening much faster. And we are seeing a lot of developments to consolidate the non-financial reporting standards. There is program going on between the IFRS and SASB, and they have formed IASB. So that institution should be able to provide us in the next couple of years with more harmonized global level reporting standards, which will make it much easier for the global investors to make informed decision and also to do a proper comparison. Similarly, impact creation standards will also evolve. That is also in progress with the efforts of the Harvard Business School. So I think both of that would completely change the complexion of how we use ESG in a normal course for investment decision making in the next 3 to 5 years. The other issues could be in terms of lack of transparency, again, all relating to data, lack of ESG expertise or awareness among investors, greenwashing or faking, which all the time happens in financial data also, is happening in case of ESG, both knowingly and unknowingly. Not adequate or consistent proof for impact creation, lack of just transition, because everywhere the ESG may not be equally rewarding, and in case of developed and developing countries, there needs to be some distinction, and limited investing universe for ESG integrated companies are some of the issues that are faced when we look at ESG investing. Next. The most important thing that I want to highlight here is that the value is migrating from tangible to intangible when it comes to investing. And this is where ESG plays a big role. And we can see this where the companies are innovating and a lot of their intellectual property is getting covered in their valuation, where the price to book ratios are very high, well above the value of their tangible assets. And that is something which is like it has reached a proportion of 90% for the S&P 500. The same thing can be said about most of the companies across different markets. So this is something which is making the intangible value very important. And therefore, the better the company's ESG, the better would be its intangible value or the intellectual value, and therefore the overall valuation potential improves. So this is something which is critical from an ESG standpoint. Next. Now I'll quickly talk about how is ASEAN position. So this is all about the equity funds. And as we can see over here, the contribution is largely from Japan, China, and to some extent in Taiwan. But other markets' contribution is very small when it comes to ESG. China has its own taxonomy and a very large amount of work is happening in terms of sustainability related programs and technologies. But other markets are still slow to pick up. So when we look at Asia ex Japan sustainable fund assets, we can see that some of the countries are very small. China and Japan are the big ones. And as we saw in case of global funds, we have seen some kind of decline in these fund flows post the fourth quarter of 2021. Next. There is though a good trend in terms of new ESG fund launches, and we are seeing a good fund launch program. Obviously, this is a mixed bag of new funds as well as repurposing of existing funds. And this is coinciding with the development of regulations in each of the countries. So China has got a new taxonomy and a compliance carbon market operational. Taiwan has got certain regulations for disclosures on ESG by the stock exchange. Same thing has happened in India. In Singapore, the monetary authority has given certain guidelines, and the exchange has come up with an ESG portal. So there is a lot of data disclosure. Also, Singapore is one of the rare countries in ASEAN which has got a explicit carbon tax, which will progressively increase over the next few years. By the end of this decade, it will be quite substantial. Thailand is also a stock exchange driven regulation, which are prompting companies to disclose more on the ESG side. So I think we are seeing simultaneous development of regulation and the ESG funds in the region. Next. Again, when we look at the fixed income market in the ASEAN, there is a growth in the green and sustainable categories, but the overall proportion is very small when we look at a global level. So it may be like in a very small single-digit number as a percentage, and this is because the taxonomies have not yet moved up to the level of the Europe or US. Also, the overall data quality is not so good and impact creation is not so solid. So all this does not make it a very attractive market for foreign capital to come and invest. Next. One positive development is that there is a lot of voluntary carbon market related activity happening in the region in the past 12 to 18 months. The Bursa Malaysia is about to start its voluntary carbon market in this month. There are a couple of exchanges already open in Singapore and some in Hong Kong, and some are likely to get operational in Japan. So that all of this are going to bring one form or the other carbon tax, and this is going to increase the carbon pricing initiative of the companies, and it will strengthen their net zero initiatives as well. So this is a good development that is happening in this part of the world, and that will develop in a good way the financial markets as well, because they are sort of interdependent. Next. Okay, now about the ESG Alpha study that we did. Very quickly on the objective of this study, what we wanted to do is assess the ESG integration levels of the corporates in ASEAN, and what kind of results they are generating in terms of stock price performance, which sectors and which countries are outperforming, underperforming, and what market cap sizes. So all that we wanted to find out in order to have a more informed opinion on the subject. We looked at about 475 companies which are covered by Sustainalytics, a leading provider of ESG data and services across the ASEAN 6 countries. And of these, about 200 plus companies are covered by the Maybank Investment Banking Group as well. We used 3 filters. We looked at low and medium risk companies. We looked at companies with minimal controversies. And we looked at companies with at least average to high management quality. And when we did this filter on 475 companies, see what we found out. Next. What we found out is that in terms of the ASEAN 6 markets, they lag the global average in terms of the ESG risk exposure score, which means that the overall risk itself is higher than the
Jigger,
global.
sorry.
Yes. Yes, Alex.
I think they were having connection issues on site, but we can hear you loud and clear. Please proceed.
Okay. So I'll go ahead. So as you can see, the overall ESG risk exposure score for ASEAN countries is higher than the global average. And as you can see, Europe is the lowest. This is also because of the high data quality and disclosures in Europe. And as the data quality improves in this part of the world, we'll also see the scores improving. In terms of management scores, except Thailand, other markets in ASEAN are lagging the global average. And the unmanaged ESG risk, which means the risk which is not covered by any of the management effort, again, ASEAN is lagging the other markets. Of our study, when we applied the filters on 475 companies, only about 37% of the companies made the cut in terms of meeting all the three filters. So about 87 companies of the 475 companies that we looked into, and the 202 companies that we cover, they belong to the low to medium risk category with no controversy and with a high level of management quality. Next. Now, coming to countries' individual performance, Malaysia and Singapore were better off than other countries when we look at the overall performance of all the three filters. And you can see here, we have rounded off Philippines. The overall coverage itself is very small in Philippines. So of the 475 companies in Sustainalytics, only 50 are there in Philippines. And of the 87 filtered companies in ASEAN, only 6 were in Philippines, which made the cut in terms of the all the three filters. So between Malaysia and Singapore, it's about 73% of the companies. And if I include Thailand, almost 89% of the companies are there in these three countries. So that tells you something about the overall development of ASEAN in terms of the ESG compliance, ESG integration and data disclosure, etc. Next. When we looked at the overall rate of returns of these companies and how they have performed on different time frames, what it revealed to us is that the ESG filtered companies with the low score, low risk, with zero controversies and high quality of management, they have outperformed the indices on each time frame. So that is the positive part, and that's something which is giving a lot of positive direction for ESG adoption in these markets. And as the data availability improves, as more companies conform to some of the ESG disclosure practices, there will be more opportunity to participate for the investment funds into these. Next. To our surprise, the mid and small cap companies, which are between 1 to 5 billion US dollars, they had a good participation. And it was not all the large caps, which generally happens that large caps have more disclosures, and therefore generally they make the cut. But here we saw that the mid and small cap companies also had a decent amount of representation within our filtered stock. So 47% were mid caps and 21% were small caps. And these outperformed substantially vis-a-vis the MSCI ASEAN index. So that is also a positive scenario. Next. In terms of sectors, we saw that real estate, REITs, banks, and consumer, these four sectors had maximum amount of contribution to the filtered stocks which outperform. So these are the sectors which are leading in terms of their ESG practices and their disclosures both. Next. When we look at Philippines, there were total 50 companies, of which 13 companies made the cut in terms of low to medium risk and very little controversy and a strong management. And then we looked at when we looked at all the three filters at one point of time, we got only about 6 companies. So in that sense, I think there is a low score, but obviously it can improve as more companies start complying. Next. Here we have given at a glance that which are the practices that some of these companies employ, which make them more compliant in terms of ESG. So these practices include issuing integrated annual reports or GRI-based annual reports or sustainability reports, which provide specific granular information on the ESG practices. Then the net zero targets, carbon neutral targets, TCFD, the climate related financial disclosures reports, SBTI, science-based targets initiative framework adoption, raising of green funds, green bonds, and representation of female on the board. These were some of the criteria that we looked at when we evaluated the companies. And as you can see, of our filtered 87 companies, there is a varying result across countries. And in case of Philippines, there is a decent number in terms of the issuance of GRI-based annual reports, in case of TCFD framework, and in case of the women representation on the boards. But the overall figure itself is very small at 6 companies out of the 87 filtered companies. So that's something which is which can improve a lot going forward. Next. So in summary, what I want to say is that global ESG AUM is poised to increase substantially to 24 to 48 trillion, almost doubling in the next few years. That is from 2015 to 2026. So over a 10-year period, it would at least double. ESG funds are outperforming the broader markets. ESG efforts and strategies are gaining importance among investors, as we saw in the surveys, and will be the main differentiator for asset and wealth managers. ASEAN is still small in terms of the sustainable funds, and it is going to see a substantial improvement, both in terms of fixed income investment as well as equity investment when it comes to ESG. Philippines is currently lagging even the ASEAN markets, but it can improve a lot because we are seeing a lot of initiatives among Philippine companies, utilities, real estate, and consumer companies to move towards a better ESG practices. And we think that that can add to their financial as well as valuation performance in the future. In general, we think that ASEAN adoption of ESG and disclosure is low compared to Europe and US, but it is beginning to grow substantially from a low base, and that should have a value add to the investors in the next few years. So with this, I conclude my presentation, and we can move to the next session with Jackie. Thank you.
Thank you so much, Jigar. Very, very informative indeed. So let me jump into it. So I've listed, I have around 5 questions, basically to sort of like mark off some of the key points that you made as well in the presentation. So I guess first one for me is stepping back a little bit. How do you think of the past 3 years, basically the pandemic years, change the thinking and the timeline on sustainable finance and sustainable financing in ASEAN? Do you believe that it's one of the accelerators into this theme overall?
Thanks, Jackie. So I feel that the ESG acceleration is basically getting spearheaded in Europe and in the US. And as we see, more of the regulation coming up from these places, that is also driving a lot of pressure in other parts of the world for companies to become more compliant. So one is a government-led regulation, and the other is a voluntary effort by the private capital through the investor pressure. So clearly in the past 3 years, what we have seen is that in ASEAN, while we still don't have a one single taxonomy, but individual countries have definitely moved. We are seeing progress in terms of ESG funds getting launched. The central banks of most of the countries have taken action, and they have issued guidelines for banks to come up with stress test and TCFD related reporting in the next 2-3 years. Then we have seen stock exchanges giving instruction to large companies at least to come up with a certain amount of reporting on their sustainability disclosures on a regular basis. So these are some of the positive things. They are not yet reflecting in terms of the ESG AUM or in terms of the green or sustainable bonds that are being raised in our markets, but it is definitely going up. And other measure that I mentioned is that we are seeing voluntary carbon markets come up and carbon pricing becoming more explicit, which will help the capital markets and the corporates in the long run.
Okay, I'm glad that you brought up sort of like how the world is evolving towards ESG, because I'm really curious relative to the pace at which ESG is being taken on board globally and also by other ASEAN countries. Where does the Philippines sort of like stand? Do you actually think that we're behind? We're at par, etc. And I'm asking in terms of institutionalizing ESG. So this is actually beyond reporting. Where do you think the Philippines stand in terms of the actual ESG story?
So, when you look at companies in the high income countries, and when you look at in the medium to low income countries, there is a big difference, and that is because there is a lot of cost to be incurred. And there are just transition issues in many of the countries in Asia. So in that sense, you can say that the practices in these countries, including in Philippines, are lagging, but they can definitely improve. It will increase going forward. If I give example in case of Philippines, what I feel is that when we look at say SBTi signatories, there are about SBTi is a gold standard for going to net zero in the corporate world, and close to 4,000 companies have so far gone to the SBTi for net zero certification, of which only about 93 are from Asia, of which only 2 are from Philippines. So that's a number which can improve. Then if you look at the Sustainalytics data, the coverage is 475 companies in ASEAN, but only 50 in Philippines. So obviously all this can improve, but we don't have to forget that this data compilation is time consuming, the expertise is not there, and it is costly. So I think to that extent, it's going to take some time to develop in not only in Philippines, but in some other countries as well.
I see. So given that, how do you think will it affect fund flow to the Philippines? Is us being behind going to be a factor or going to be a deterrent for, let's say, foreign funds to come into the Philippines in a meaningful way?
So as I've been trying to say through my presentation, that most of the funds are becoming ESG or will become ESG driven. So there won't be any differentiation in the next 10-15 years between a normal fund and ESG fund. All investing will be ESG investing by and large. So therefore, I think if you have to attract more funds, more global funds, whether in the private market or in the public market, you need to adopt ESG, and the cost will be more than recovered through the fund flow that you will receive and put to use, and also through the increase in your valuation. So therefore, I think it is very critical that the adoption becomes faster. If not, then obviously there will be some loss of opportunity and the risk will increase.
Just a follow-up question to that one. Do you actually think that funds who are more active, more aggressive in terms of their sustainability targets or sustainability, I guess, aspirations or framework, do better in terms of stock price performance relative to those who are naturally not exposed to any ESG risk? So I guess put another way, is the appetite of investors towards ESG driven companies more driven by the company's efforts, or is it more on the exposure side?
If I have understood correctly, you want to say that is there some magic formula for companies who adopt ESG? Basically, the answer is yes and no. Most companies, at least the large ones, will try to adopt ESG because the pressure is coming from everywhere, from all kinds of stakeholders, and of course shareholders. But very few succeed for the simple reason that it will have to be an embedded one. It will have to be embedded with their company's business strategy and should reflect in their products and services. So just to give you one example, you look at Tesla and you look at Honda, Toyota, the German car companies, GM, Ford. Tesla alone has more market capitalization than all of them put together. The reason is the success of their product and services. Another big name with a big success is Unilever. Over the last decade or so, they have done very well with a very large size of business. Another company I can say, name large companies, Walmart. So some of these companies are actually walking the talk, and as a result, they are achieving results which can be quantified, which are other than the financial performance. So you need the financial performance as well as you need certain amount of other impact that is in the form of environment or social, and that result is reflecting in the market value. So I think not everybody is successful, but the companies who are able to put it all together, they are the ones which are more successful.
Great. And yes, completely agree.
So end of the day, it depends upon the amount or the intensity of the transition. If they are successful in transition, so there are utility companies which became from total fossil fuel driven to complete renewable. In Europe, there are some stark examples like Ørsted and Iberdrola, and they have seen substantial amount of success as a result of that.
I see. Great examples. Because in the Philippines, you also have those kinds of companies who are moving towards RE. And agree with you, the valuations just basically shot up with just the story and not even the actual completion. Okay, thanks for that. Moving on. Okay, so this is a common question we get from a lot of clients. A lot of ESG metrics and ESG standards globally. There's a lot of jargon, a lot of standards available globally right now. And it's actually sometimes very confusing, particularly for investors who are quite new to looking at ESG or sustainability as a concept. From a practical perspective, which metrics do most countries use or follow, and which one do you observe is the most indicative of, stock price performance?
I wish I had, one simple answer to give. Unfortunately, it is not, because in ESG there is a concept of materiality, and the materiality differs from sector to sector. So in a oil and gas or transportation sector, the E will become very important, and if you're talking about a technology company, the S will become very important. So what probably works in case of an Amazon or Google will not be working when we look at a ExxonMobil or Shell. So we'll have to see it differently. So the key thing is to find out what is material or what is materiality matrix for a particular company. And then within that materiality matrix, how that company is transitioning. Are they addressing those material issues? If they are addressing, then that means that they are moving in the right direction, and we can quantify that, especially the E factors we can quantify. And if they are not doing that, then that means they are increasing their future risk or liability or potential lawsuits, etc., which can affect their earnings, their cash flow, and could also lead to some stranded assets. So all of this could be true, and we can look at it in multiple ways.
So if I understand you correctly, basically there's no one size fits all, and there's also no shortcut. Like basically, for us to have a meaningful sustainability view, there's no shortcut. Companies really need to, or investors would really need to sit down and understand the company and measure the materiality of sustainability metrics across that sector at least. Okay, got you.
Which is what, as you know, we are trying to do through our
Yes.
ESG tear sheets in our notes as well, which will make it much easier for investors to take an informed view.
Exactly. Okay, I guess final question from my end. There have been concerted efforts to push sustainability financing across regions. So we have the ASEAN taxonomy, for example. In terms of the effectivity of this approach of doing it more sort of like holding hands with all of the other companies, given the various countries, various sector exposures, and also the various stages at which their ESG journeys are at. For example, I would argue that Malaysia and Singapore are much ahead of the Philippines, for example. Does that sort of like blanket approach work, or do you believe in democratizing sort of like ESG or sustainability on a per country basis?
So it's a mixed bag of factors which will work in order to achieve a scale or to attract a very large amount of funds, which will in turn drive capex for sustainability. So as you can see, there are two legislations which are right now doing that. So in Europe, there is something called Fit for 55, which means reducing energy intensity by 55% by 2030. So there is a program in Europe which gives a lot of incentives to industry to decarbonize and to improve their energy efficiency. Similarly, the Inflation Reduction Act has been announced in the US recently, and with a very large budget and a significant amount of carrots, no stick. So I think this is the kind of incentive that we will also have to give in other countries in order to attract that kind of investment. Secondly, the taxonomies need to evolve, and any kind of greenwashing needs to go down or reduce substantially. In the interim, what countries can do is go with a sovereign green bond or sustainable bond issue, which makes international investors more comfortable, because if they see risk with individual assets, when there is government sort of in between, or the sovereign comfort is there, they will be in a better position to invest through the sovereign bonds. So that way, at least the investment can be attracted in respective countries where it is still not possible to do it on a private capital basis.
Okay, that is my final question for you. I will now turn over the floor to Alex for more questions on the ground. Alex?
Okay, thanks, Jackie. Thanks, Jigar. Anyway, there are three ways to ask your question. One of them is to relay it to your favorite Maybank representative. Number two, you can easily type it in the chat box. Number three, you can raise your hand and we will unmute you. So we already have three questions in the chat box, so I'll start there. I'll start off with Mr. Tone of Albizia Capital. How much are retail investors weighing in on ESG when it comes to their investment decisions as compared to institutional investors? Can you please share retail investor contribution in ASEAN and the Philippines, and how would that number imply to the ESG investing developments in the near term?
So I must say that the retail investor participation on ESG is quite low. It's not that they are not interested, but largely I think their investor interest is coming through the mutual funds and other managed funds, and it's not direct. And I think it requires a lot of maturity and understanding in order to take any active participation from a retail investor on the ESG. So I think that is likely to remain low. More or less, the ESG participation will come through the institutional route, through mutual funds or private equity funds or such other active mandates. Even the ETF proportion is very low in case of the ESG funds. It's there to some extent in Europe and US, but definitely not in Asia. And even over there, it is low. So I think it is not yet developed for the retail investors.
Okay, thank you, Jigar, for that comprehensive answer. Second question comes from one of our directors, Mr. Dennis Montecillo. Question number one, who are the 6 Philippine companies that made the cut? I know you cover a lot of stocks, Jigar, on this one. And question number 2, do investors really care about ESG, or do they really only care about ESG? For example, would they look more kindly at, say, a Tesla that may not have a diverse enough board or inadequate minority shareholder representation compared to, say, San Miguel Global Power that may have an aggressive diversity program or greater stakeholder transparency?
Sure, let me take the second part first. So investors definitely care about ESG. Otherwise, we would not see so much amount of time and investment of time and expertise on this subject. So it is definitely very critical. The reason being that the only shareholder-driven capitalism is no longer relevant, and that has been acknowledged by all the large global funds as well as corporate. So stakeholder-driven capitalism is here. And unless a company which is doing well is also doing something good, it is not welcome. So definitely, the world will end if we continue the capitalism the way it is, and it will do a lot of harm. So that's not going to work. ESG is definitely something which is very critical. The other point is on a Tesla, etc. So there is no perfect formula here. The key thing is that there should be a combination of purpose and profit. So both the things should come out well. In case of Tesla, it definitely did work. So the company had massive success. It was pioneer in electric vehicles. It did a lot of good to the environment. And it is also successful now financially. It was not for many years. So both the things, when they coincided, it resulted into significant increase in the shareholder value. So I guess both the things will be required. As far as the 6 Philippine company names are concerned, I'm not immediately on top of it, but I will, as we still go through the event, I will put it in the chat box.
Thank you, Jigar. Actually, from the same from Mr. Dennis, he also wanted to clarify that it seems that investors really care more about the E rather than, let's say, SNG. So just wanted to add that in.
I do agree that the emphasis is right now on E because E is very much in our face. We are running out of time in order to make sure that we don't increase our temperature by more than 2 degrees centigrade by the turn of the century. Otherwise, we will see much more of the natural catastrophes that we are currently seeing, and that would make life very difficult for our next few generations. So obviously, I think E is most critical, but E and S are closely linked. And generally, if you see wherever there is a problem relating to E, whether it is global warming, whether it is the heat whether it is too much cold, whether it is floods, typhoons, all cyclones, all those kind of things, we can see that the poor people, they suffer the most. Income inequality is highest in those places, and it results into all other kind of problems. So I think E and S are correlated to a great extent, and the remedy for both of them will be kind of not isolated. It will have to be a combination approach.
Well said, Jigar. Thank you. Now, the next question comes from one of our Maybank colleagues, Rachel.
Alex, just to stop you for a minute, my colleague
Sure.
Nirav has shared the 6 Philippine company names. They are Ayala Land, D&L Industries, Globe Telecom, GT Capital, Monde Nissan, and SM Investment. These are the 6 companies.
Okay, thank you. Thank you for that. Yes, yes. For following up on the 6 companies. Now, moving on to the next question from Rachel. I understand that management / governance plays a big role in company stock performance, but what I want to understand is the role diversity plays. I ask this because majority of Philippine corporates have a high male percentage in the board of directors. It's actually true. Comments,
Yes,
Jigar.
Yeah, I think a very good and relevant point. In fact, our former CEO was the chair of Malaysia's initiative on the diversity, and there was a lot of work done in the past 1.5 years on how to increase the female representation on the boards. So clearly, when you look at Europe or US, they are trying harder on this, and they are trying to see that female representation. I think Europe has come up with a regulation that it has to be minimum 35%, going up to 50% in the next few years. And in US, it is not specifically stated that way, but they are also going towards that. So typically, their representation is 30% plus. And in Asia, largely we are seeing that it is still in the range of about 20-25%. So there is room for it to go up, and it should be ideally at least 50%, if not more. And that's something which will require a lot of work. Apart from this, there is also the issue of equality and inclusion, which are very important. But these issues are not well understood, just like in a case of environment, where we can talk in terms of data of emissions, of waste, of water use, of recycling, etc. So the data and the metrics are still evolving in case of the S factor, the social factor. And as the more data evolves and more companies and boards pay attention to that, we will see that this issue will be addressed. In fact, a lot of work has been done in this area, that companies with a proper share of female representation in the workforce and boards, they have been considered to be more competitive, more successful in terms of financial performance, and having better value on the exchange as well. But that data is more flowing from US and Europe, and therefore in the Asian context, it is not yet very much relevant.
Okay, thank you, Jigar. Actually, I'm aware of the time, and those are the questions that were given by the participants today. So on that note, I want to thank you, Mr. Jigar, for again presenting the ESG case to our Philippine participants. Hopefully, we'll see you in our future ESG sessions going into 2023.
Thank you, Alex. Thank you, Jackie. Thank you to the representatives from the PSE. And I wish you the very best, and will be very happy to be on your platform again. Thank you, and good day ahead.
Okay, thanks and welcome, Jigar. Now, that ends our first session for today's ESG event. Jumping into the second session is really what does the PSE role in propagating ESG in the Philippines. Now, representing the Philippine Stock Exchange, is none other than the Philippine Stock Exchange Chief Operating Officer, Attorney Roel Refran. So Attorney Roel started his career at CSIP Salazar Hernandez and got my time before joining public service as Chief of Staff of Senator Ralph Recto, who was then the chair of the Senate Ways and Means Committee. He also had a brief stint at ACRA before joining the Philippine Stock Exchange. Ladies and gentlemen, Attorney Roel.
Thank you very much, Alex. Good afternoon to all the participants, and congratulations to Maybank. No, we've been poring over the research report, and we thought this was a very useful, I would say, process and data points that we could use from a policy formulation perspective in the Philippine Stock Exchange. So when talk about a potential collab with Maybank came about with Alex, I thought the big impact of this discussion would really be to heighten the awareness. And as discussed earlier, when you look at ESG narrative, no, whether it's in ASEAN or globally, we are all coming from different starting points, I would say. For example, the Philippines just came up with its NDCs, and we have been working closely with the Climate Change Commission to make sure that it's not just relevant, but also meaningful and credible. Now, those terms cannot be overemphasized when you talk about ESG because, as Jackie pointed out, this becomes pretty much very complicated. No, the taxonomy, the jargon, the variances in the standards. No, but we in the Philippine Stock Exchange would like to stay true to our objective when it comes to an organized marketplace. No, the role of PSE in any discussion, whether it be in the E, the S, the G, whether it be, for example, in discussions on how best to protect investors, will always be when you look at our regulatory functions, no, in the context of fundraising, what can better serve or best serve investors such that informed decisions are made, not just when you do a primary offering, but more importantly, as markets are open. No? Decisions are being made anytime that markets are open for purposes of buying or selling securities. So that's a big context. The appreciation of ESG should, from our perspective, no? When I say our perspective, it's not just PSE, but also with our ASEAN peer exchanges. No? And we were also very much in that discussion simply because we are very aware when you look at ESG that equity capital markets versus debt capital markets, you would probably see more of ESG action, I would say, in the debt capital markets. And it's very intuitive in the sense that at the project level, you could pretty much monitor, align, as well as continuously report to investors whether you are hitting your targets at the project level. And whether it be a green bond or a sustainability-linked bond, or any other transition initiative, the quality of the information is very important. No? Whenever, for example, you come up with a prospectus, which is to be submitted to the Securities Commission, as well as to the Stock Exchange, we go through completeness as well as fullness of the information. Because when you look at, for example, risks, and that's really the core of the ESG narrative. It's all about risk management. How will we be able to future-proof businesses based on ESG requirements, maybe not just industry-specific, sector-specific, but really on a global perspective. So if I identify that I'm in a very risky sector, but nevertheless, for example, I'm in the mining sector, and I want to probably transition and be more mindful of the NDCs of the government and to align my objectives with the efforts of the government, then I have to make sure that not only do I disclose material ESG risks, but what are the mitigants in my fundraising exercise, no? So that investors would make a decision whether I am to be believed, whether they will invest in my company or not. No? For example, that's an follow-on offering. It could be an initial public offering. So if you look at that life cycle, no, of fundraising, you would see that touch points would necessarily be on the disclosure. Disclosure here would always center around material information. And material information, Jigar pointed out, will have to be in the context of what are your targets, no? What are your sector specific risks? What are your targets? And we are of the view, when you look at disclosure, that timing is as much important as the quality of the disclosure. When I say timing, yes, there could be integrated sustainability reports, but that comes at, let's say, an annual basis, right? When markets are open, there might be ESG developments that are not just to be set aside for the compilation on an annual basis, but these have to be reported on a real-time basis possible to the market. No? Why? Because they're material. As markets prices are being formed, efficiency of markets requires that you actually share that, and that will have to be incorporated in the price formation process in secondary markets. So that's when I say timing. When we look at the timing component, that we're also very mindful that the disclosure obligations of companies or issuers, when they look at not just ESG but also material information, is really mindful that insiders as well as the public should have equal access to that information. So the second point on ESG disclosure is the quality. And Jigar pointed out the challenges, and I was looking at the challenges, not just that there's no standard framework. You could use SBTI, GRI, PRI, and a lot more acronyms in the mix. But really, who is to probably standardize, right, all the requirements? Because that's also a very core function of exchanges. We standardize features for listing. For example, if you want to launch a particular product or derivative product, it has to be standard features. In the same way, when you look at reports, we try to standardize it in the sense that it will make it easier for users of the information to go through what is relevant. No? So in terms of accuracy of information, I don't think exchanges would go to that extent, but put that responsibility on issuers, right? So as long as it's timely provided, as long as it's complete, full, then I think that will be a big step already compared to when people just really share information depending on what objectives they wish to achieve. And that really defeats the purpose of fully disclosing material ESG risks, fully disclosure material ESG developments, not just for issuers that are adopting a transition strategy, but for all existing 284, 85 listed companies of our market. So that's on the disclosure component. I should like to highlight, when you look at the role of an exchange, is to also, when you look at listing per se, we would like to see more and more of the renewable energy companies, for example, more and more, for example, of REITs that may have that green story behind them. And this has now evolved based on what we're seeing globally. Data centers for the longest time have been net greenhouse gas emitters, right? But nowadays there are other jurisdictions where data centers have a green component. And this is probably an upside potential for our market. We look at potential issuers, not just domestic, but also multi-jurisdictional issuers. And we hope that the listing appreciation, for example, of issuers, would be to factor in which market would give them good valuations from a pricing perspective. And so we circle back again to the quality of information, especially when you look at price formation, even on an initial public offering exercise, for example. The quality of the price that is formed, we'd like to believe, will always be a function of not just the integrity of the information, but also of the completeness and of the veracity and the verifiability of certain information. And assuming all things are in check, then hopefully the price valuation would also be favorable to different stakeholders, to make it more of an ecosystem benefit rather than just specific to a particular stakeholder. And then also like to highlight as a third point, when you look at where we are right now, we are still in the crawling stage. I will not make any representation that we are catching up with our peers. No, we're still learning what would be customized to the Philippines, even as this issue is agnostic as to a particular market, right? This cuts across different markets, but we have to also understand that when you look at practices as well as cultural nuances, there are always customizations that will have to be factored in. So yes, we are still crawling in this story. But I think what's very comforting for us is when we look at information that's being provided, like for example, the Maybank research, showing that there really is a market premium when you look at performance-based metrics with respect to ESG conscious or ESG sensitive issuers or securities compared to those that are really not yet, I would say, in this frame of mind. And that is a very compelling story, especially if you look back more than 10, 20 years ago, this was the same narrative when it comes to corporate governance. Is there really a premium? And how are we able to validate that? I think the research output by Maybank, which Jigar walked us through, is very compelling in that it does provide a lot of data for us to share with our stakeholders that really this is a narrative that we cannot not be in that story. Okay, so we are at the crawl. Hopefully we'll go to the walk, eventually to the running stage. No, but in any visioning exercise, if you wear your strategic hat, how do we get to the future state, right? We are where we are right now, but that doesn't mean we will stay where we are. So I think it's very important, first point, to establish alliances. That's why when we embarked on this ESG journey in the stock exchange, we knew that we are not going to be able to move mountains by ourselves. Now, we need to liaise not just with private sector participants like Maybank and other stakeholders, but more importantly with the government. No, that's why the Climate Change Commission. There are also other public-private sector groups, for aquatic diversity. Because when you look at ESG, it's not just about particular sectors. There's terrestrial, there's aquatic biodiversity elements, there's clean transportation. So it's really a multifaceted story. And we needed to make inroads in terms of relationships, in terms of opening up collaborations with multiple stakeholders to make us more of a country-specific, it's like what we call here the Bayanihan approach. This has been an aspiration for the longest time for everyone. But I think the magnitude of the problem is very pronounced, especially with all the extreme climate conditions, the super typhoons that we've been facing for the past, 2, 3, 5 years, not just in the Philippines, but also globally. So it is important that we touch a sensitive chord, not from a regulatory perspective, but from a humanity perspective, right? In the end, this story is not about financial markets. This story is not solely about, benefits of the issuer stakeholders, but really, this is our one and only world. As they say, there's no plan B. When we pass on this planet to the subsequent generations, hopefully it will serve them in good stead. And this is where we are pointing at when you look at bridging the gap. It's going to be an intensive education campaign for a lot of stakeholders. More importantly, we have to be able to inspire other stakeholders because as the saying goes, you cannot wake up someone's already awake. We already have the first movers, those which are covered by the Sustainalytics and the other providers that Jigar mentioned. But our goal is that no one should be left behind. Everyone should pull in the same direction, should maybe not all commit to a net zero initiative. Maybe some would go to a transition strategy. But what we're saying is to start is just as important as to achieve the objective. The journey here will rest on everyone's shoulders, not just one of 10 of 280 plus listed companies. No. And I think when you look at this story from that prism, from that perspective, then I think we will be more credible. We will be more, I would say, more convincing and compelling, especially as we connect financial markets to the underlying economy, right? Jigar mentioned, for example, the size of the ESG funds out there compared to the size of the ASEAN GDP to market GDP, 1.7 in terms of the funds. But on a GDP basis, where ASEAN account for 3.6% total GDP. So I think here, this is beyond us saying we have to catch up. No, that's not our objective here. Objective here is for us to make a difference. And that might sound too simplistic, but whether it be through regulations, whether it through be guidelines or guidance documents, we in the exchange feel that this is an argument. This is a story where doing nothing is not an option. So, bridging the gap, we are looking at hopefully coming up with disclosure guidances. We are not doing this in isolation. We're working with other peer exchanges. No, we've actually gone through defining relevant metrics or for purposes of the E and the S, and hopefully in the next couple of months on the G to complete the ESG metrics recommendation for public listed companies. At the right time, we'll also be sharing that with our stakeholders. So that's one, guidance documents. Secondly, it's really to probably highlight that the where we are right now in the Philippines, there are a lot of upside potentials, good opportunities for fundraising for purposes of issuers who may be compelled to consider listing in the Philippines instead of elsewhere, right? And I always say the home bias element when you look at investing should always work not just for investors but also for issuers. No, this, the regulations, our challenges. So let that home bias principle work in our favor. We're very mindful of that. Another way by which we'll be able to bridge the gap, for example, is also focus on priority areas. Number one, a priority area would be those high-risk sectors, for example, the mining sector. When we launched our new Philippine Mineral Reporting Code, we consulted different sectors in the mining industry. And what we embedded, we adopted the Joint Ore Research Score of Australia, but we embedded an ESG element such that now, whenever you look at feasibility reports to be required of mining companies, the accredited competent person, we call them the ACPs, will have to embed an ESG evaluation, which would probably require third-party opinions, second opinions. But we require that to make sense of, we're trying to hit the priority areas because they are probably top of mind when you think about sectors that are, instead of reducing greenhouse gas, are releasing greenhouse gas. So prioritization of industry is very important to us. So we've done that with the mining sector. We're also encouraging, for example, renewables, easy access to capital markets. No? We've relaxed their track record requirements when it comes to initial listing for IPO purposes. So we'd like to see how we can better reinforce that. As we know that when you look at solar companies, run-of-river companies or hydro companies, there's a lot more that could probably participate in the capital markets other than the companies that we're seeing right now. So we want to broaden that the scope and the depth of potential opportunities for investors. And finally, in terms of product offerings, how to bridge the gap, we feel that there's a demand for ESG indices, number one. Number two, assuming that we're already at a stage where we can come up with sectoral indices, ESG themes. We also feel that at a certain point, the companies that we recognize as being first movers or being champions in the ESG story, will probably, we're looking at other ways of further incentivizing those who are still on the fringe to consider really going all in with respect to ESG being embedded in their strategy, not just as a PR advertising campaign, but really committing that this is going to be a strategic initiative aligned with their primary purpose. Now, the moment they're able to align that with their primary purpose, then we feel that is the best way to advance this narrative. And we've seen this, for example, go opposite direction in other markets. When we saw, for example, the Volkswagen scandal, right? There was that defeat device embedded just to make sure that they don't run afoul EPA standards, no? And that did hit their market capitalization really bad. And we saw that doing good really is not a choice. No, it's really a must do for all of us in the sense that it's sustainability is not to be turned off and on. It has to always be ingrained deeply in processes. No, beyond motherhood statements, you look at the granular details, and that's how you could probably say that this company is sustainable because it's still going to be here 50, 100 years from now. So that's how we try to simplify the ESG story. The definition of sustainability, will you be here 100 years from now? And if your answer is in the affirmative, tell me your story. How are you able to do that? If you say maybe, maybe not, I'm thinking how we can be sustainable, then that's the discussion that we in the Philippine Stock Exchange would like to be part of. No? And I hope Maybank would continue to help us because we really need everyone's help. And it's very encouraging for me to look at this story from a multi-sectoral dialogue perspective, and I hope we'll learn as much as we can also contribute to this narrative of ESG. So thank you again, Alex, and to Maybank for this opportunity.
Welcome, Attorney Roel, and thank you also for gracing our event. Thank you for the clear message from the PSE of being an enabler of ESG in the Philippines. And from here on, probably we'll open the floor for questions. Like mentioned earlier, 3 ways to do that. One is to get in touch with your Maybank representative. Number 2, you can easily type it in on the chat box, and we'll share it with the participants. And number 3, you can raise your hand and we will unmute you. So we have a few questions already. One is, are ESG initiatives of publicly listed companies disclosable while market trading is ongoing, or can it be summarized in a once-a-year report to the SEC and the PSE?
So that's a very important consideration, Alex. To the extent that the ESG initiative or development impacts, is very material, that it impacts potential, let's say, valuation, potential continuity of the business, that has to be disclosed on a real-time basis. What's an example? If there have been regulatory sanctions imposed for non-compliance with environmental standards by the sectoral regulator, that cannot wait disclosure until, let's say, the time you file your annual report, because currently that's the timing required. Now you attach your sustainability report, otherwise your annual report will not be considered filed. No, that cannot wait. So these developments on a real-time basis have to be disclosed because they also marry with what we require to be disclosed, is material information. If it's a strategy per se, and not in a sense market moving, right? Our definition of market moving is while trading is open, will that information be probably considered by a reasonable investor in the investment decision, right? If it's adoption of a strategy, that may not be immediately mandatorily disclosable. For example, adopting KPIs, science-based KPIs, targets, SDG, sustainability development goal targets, in order to achieve particular, let's say, net zero initiatives. Just to give an example, that may be proper for a integrated sustainability report, as we've seen. But more importantly, it's again, I go back to the concept of disclosure. Even on an annual basis, has to be verifiable and complete, no? Because disclosing half of the stories is just as probably not helpful as disclosing nothing, right? You have to give the complete picture. When I say complete, the metrics or the how you're able to monitor, how you're able to measure. Is there a baseline year? What are the baselines here, so that we could chart the progress of the company as investors also refer back to previous disclosures, including sustainability reports. That's a long way of answering the question, but in short, Alex, on a case-to-case basis, but essentially the materiality will always be the guide, the safe harbor here. It's material. If there's doubt, disclose it. The other components of the ESG story would probably be best explained and digested by investors in that integrated report on an annual basis.
Thank you, Attorney Roel, for that comprehensive answer. We have a question on the chat box from Sir Dennis Montecillo. What can PSE proactively do as an exchange to significantly increase the number of firms that pass the Sustainalytics criteria? 6 is an awfully low number. What's an aspirational goal, Attorney Roel?
Very good question. Hi, Dennis. Our goal right now is to make sure, for example, you look at ESG coverage, the top companies are covered. No? Our top 30, you'll be surprised. We've done our discussions with different rating agencies. And unfortunately, the big ones are not even able to cover all 30 of the index stocks. No? And that's not very comforting for us. So we're working with different, I would say, data vendors and as well as rating agencies to get a sense of what it will take for us to be a catalyst to make sure that whatever information is not available right now will be made available by companies towards us getting full coverage for the top 30 companies, the PSI companies. Though. But I'll step back and consider how we could also get the second, third liners to participate and be very much committed to this story. What we can do, as I said, is we could, other than focus group discussion, is really come up with guidance documents because some people are looking at this from an expense perspective, from a resource or effort required perspective, and then they get turned off. Why? Because when you look at monitoring, when you look at, for example, commitments, it requires technology, right? If I want to make sure that a particular building is green, is labeled green, I need to make sure I'm able to monitor my energy consumption per room, per floor, my water consumption, certain times of the day. And you'd be surprised, in certain developments, these are all already very interactive, no? Such that any visitor in the building can actually interface and see whether, which, how is this structure aligning with the commitments of for example, no, it being a green building. So that's pretty expensive, that technology, but really it has to be done. No? You don't look at it primarily as a CapEx or OpEx expend, but really for us, this is our skin in the game. No? Us pulling out all the stops to make sure that we don't fail in making sure that, maybe the 2 degrees Celsius target may be very ambitious. As the UNFCCC said, we'll probably hit 2.6, 2.9 degrees Celsius by end of the century, but that will not deter us. No? So I think our role here is to probably echo and be hopefully more assertive in making sure that the ESG story is, I would say, properly understood, because behind all the acronyms, and there's a lot of acronyms, behind all the technical terms, I guess the issue is very close to all of our hearts. No? And this is, how do we make a difference and save what we only have, which is the only planet that we have, while we still can. Otherwise, if it's too late, then probably that might not be an outcome that we would all like. No? So it's a long journey for us on how we could be a catalyst, but we're using the tools available to us via our access to the different participants, no, and in a regulatory capacity, but mindful that we cannot be very much adopting a do this otherwise will be penalized approach. No, because we're still getting people to understand why it makes sense business wise, because all of us are in business, has to also address that business commercial decision for them, no? And then we can broaden the consideration and hopefully get their full support and not just half-hearted support.
Thank you, Tor Will. Next question comes from our Maybank colleague, PJ. We heard from Jigger earlier that E remains to be the most vital part of ESG so far. Based on PSE's observation, what among ESG is considered most important by Philippine investors? What aspect does investors put most premium at this early prowling stage for Philippines?
Thank you, DJ. We see that I believe on the E, the S, and the G, it's really a runaway material risk. Is just the E. But that is not to say that the G or the corporate governance has suddenly fallen out of favor. Because when we talk about, when we speak to sovereign wealth funds, for example, as well as other institutional players, and our discussion on what would be important ESG considerations for them, they always start off with telling us that, on the G component, the governance component, no, it's making sure that the principles of corporate governance on accountability, transparency, and fairness are really practiced all across the organization. No? Separation of functions, making sure that the audit committee is a working audit committee, making sure independent directors are indeed independent. No? not just representing, let's say, certain sectors. No, so that probably is very easily understood amongst our stakeholders, the governance component. But I'd like to say, when you look at the ESG story, the E and the G, primarily probably because when you look at the S component, other than the women representation in the board and across the organizations, I guess the training, employee development programs, making sure that your hiring, your retention, and your employee benefits packages are not gender exclusive, but rather gender neutral and inclusive. No, I believe that this has been more, I'd say, adopted. Not probably because just we're socially it's something that we have embraced, but probably because also it aligns all of our interests perfectly. No, we're all probably either working or are on the employer side of the equation. So I guess that probably lends itself to companies being more, when you look at the assessments by different agencies on the S component, and you'd be surprised that we're not a laggard in some of the areas of consideration for that. When you look at the E and the G, that's where we need to improve the most. Give and take criticisms that may abound with respect to, why will I believe this credit rating agency compared to others when there's no uniform standards, and there's a need for verifiable information. Otherwise, all of the dangers that Jigar mentioned, the challenges, would not be addressed. So the E and the G to us have been very front and center. But I guess between the two, it's really still the E that would weigh the most when it comes to not just investors, but also issuers being part of the ESG story.
Thank you, Attorney, for that very good answer. We have some more questions here. First off, what benefits, financial or non-financial, can issuer corporations with clearly defined ESG initiatives derive, which may incentivize more issuers to align their strategies with the NDCs?
Yes, that's what we have been working with the government on and other private sector representatives. No? Because while probably fiscal incentives, and I hope I'm able to share with you accurately what our policymakers share with us. No, probably at this point, fiscal incentives may not be realistic. No, the same way that you look at carbon credits in other markets who have been very advanced. And other fiscal incentives being given on the basis of whether you're compliant with the Paris Agreement targets or not. No, what will, however, say that there are non-fiscal incentives, ease of doing business, ease of listing, for example. No, as we've said, we have relaxed for renewable energies companies. No, listing requirements for person track record. Maybe another incentive is making sure that we do recognize them. You'd be surprised when you look at all of these intangible benefits. No, it's the recognition, the labeling is very important. No, and you look at the debt capital markets, for you to be labeled a certain way, there's very strict compliance with certain metrics and certain taxonomy requirement. No, so us in the equity capital markets, we feel that if you could also recognize not just the first movers, but hopefully those who are able to fully align their objectives with the targets NDCs, that we hopefully can recognize them, not necessarily just to award them, but also to relay to the policymakers that these companies are forging forward with respect to showing the way, and hopefully they're able to convince others to also move in the same direction. So other incentives would be if we come up with indices that these companies that are already aligning their strategies, their operations with ESG would also derive certain benefits. Now, being part of a sub-index or a sectoral index with an ESG focus. No, I think these we can work closely with different stakeholders. No, because of course, depending on the pace at which we're able to move forward with our commitments, no, a lot of pledges, but in the end, it's really what we actually get off the ground that will matter the most. No, we hope that we're able to tie in and intersect with the different stakeholders. No, as we learn as we go also on this initiative.
Thank you, Attorney. Well, probably for a last question in today's session, how far are we from a potential PSE ESG index, Attorney?
So in an ESG, in an index development, for example, no, what we're looking for would be widespread data points with respect to companies that may be good candidates. No, so we're probably talking about, you look at 15, 20 companies to be included in that ESG index. No, as you've probably seen in our mid-cap index, we cannot limit it to a small universe. No, it has to be, otherwise that index would not be believable and credible. So how soon? We hope we're able to gain traction in terms of being able to properly label, categorize these companies as potential ESG participants and hopefully index members. If we are to have that, it's not that we want time for purposes of getting more interest drummed up, but really we hope that when we do the index products, now whether that be for ESG, there was also questions on how soon can we have an REIT index. No, while we're still growing the REIT industry, there's also that demand already. I think it's a function of evolution of markets, and when you look at product development per se, we also have to go with making sure that it's not a forced evolution. We want to make sure that there's really enough data sets or participants for us to meaningfully create an index. No? I hope, Alex, that happens in the next 2-3 years, hopefully, if not shorter, for us to be able to work from there, work our way from there. Whether it's hopefully at some point there will be index futures also, where ESG is front and center, and probably we'll start with the index first. That's something that we can get our feet wet on and make sure that we're also not really finding or reinventing the wheel. No, at this point, while we're still understanding how the wheel works, so to speak, we want to make sure that once we get in that in that particular state where we're able to credibly launch an index, that we'll get some more focus and more alignment with the ESG objectives of not just the Philippines, but really the world over.
Okay, thank you, Attorney. I guess on that note, I would like to thank Mr. Jagar for the first session, and of course Attorney Roel for the second session, and sharing your comments and expertise on ESG. Good to know that ESG is alive and well in the Philippines. Hopefully we can take it together in the next level. And to all the participants in today's call. So thanks again for dialing in. We hope to see you in future Maybank webinars or face-to-face events in 2023. But for now, advance Merry Christmas, everyone. Happy New Year. Please stay safe and hope to see you soon. All right. Bye, everyone.